Ira Epstein with your weekend edition of this metal update for Friday, and we are now on the 3rd of May, 2019, and the time right now about 2:55 in the afternoon. You're very close to where the settlement prices are going to end up in the metals. Silver got pounded against gold this week, and it's been making some of that up over time. The copper market's getting a bounce because this coming week the Chinese are coming to town. We were there last week, well actually this week. And now next week they come here, and the question is, can we make a deal? Now each time that a deal or the meeting happens, copper has a tendency to get a bid into it, and then depending on how those talks go, you either pull the air right out of it, and that's what happened this week, or the market gets a nice rally. The market's been disappointed so many times off these talks that were supposed to be finished in March. Now we went through April. Now they're talking in May they're going to get them done. We'll find out. We still have Mexico and Canada to talk about. It was a week where Fed policy was set not only here, but a number of central banks all over. The dollar has fallen back a bit as we've gotten a little bit of strength in some of the currencies. The British pound got a big rise today, but every day is a big number in the British pound because they're dealing with Brexit and they're dealing with local elections. Who controls what? It's pretty difficult. When I come to the monthly chart of gold, you're at a very important area right here. Notice how the market over the past, 3 months basically, has pulled back into the zone of this 18-month moving average of closes. That's what the red line is. The market has been caught in between. Remember, this is a monthly chart, so each line represents on the chart a full month of trading. Since 2016, and that's really when you go back, this has been your top zone into that mid-high 1300s, 1370 range or so. Back down, one big break all the way back here that you can see, the most recent break I'm talking, where the market got down to 1161.40. You had been lower back here. Then the market came back up, fought first and stopped at the 18-month average. Next thing would be is if it can continue, can it get up to the 100-month average? That's the green or the black. And what the market did is it didn't. It just stalled and came back, and it's made a home right here. Traders are looking to see, is there any hope for the gold to the upside or downside? Either way, you're pretty much sideways right here. When we come to a weekly chart, a little different story. You've gone from 1329.20 down to a low, and these are closing basis of 1271.90, and you've come off that low about $8 overall. And that's about where you're at right now. The bias is down because you're under the 18-week moving average of closes, so I'll call that. When I take a look at a weekly bar chart, well, this is how it looks. The first study I put on a chart, and by the way, that was the high that you've had recently on a weekly chart, 1344. I look to see, is there a pattern for a trend? The swing line helps me decide that. The swing line is designed that it looks back, the current week looks back, and it says, I'm making a higher high week, I've got a lower and low week, I have an inside week, I have an outside week up, outside week down. Outside week means you took out the previous week's highs and low. Off of those 5 rules, I created this formula that automatically draws on the chart, and it tells me if I'm trending. The definition of a downtrend is lower highs, lower lows, as I define it. Lower highs, lower lows. We're in a downtrend. You'd have to, on the current pattern, take out 1309.10 to break that particular pattern. I then filter it with moving averages. Now, during my daily videos, for those of you that are subscribers to that, you know I use more averages than you're seeing here, and they're very important. But for this type of video, we're just looking to see on a weekly basis what's going on. And what's going on is the market's trying to make a stand at the 100-week average, the green line. That's what this is. Resistance is still 1297. The trend is still down, but now for 3 weeks in a row, that has held the market to a degree. Another popular study I put on the chart are Bollinger Bands, and the reason is, be it a monthly chart, weekly chart, whatever, a chart's a chart. And the theory of this algorithm is that the market will find resistance against the top band, support against the bottom band. And it depends, are you coming out of sideways action or already in a trend? That's very important. In this case, the market was in a downtrend, got into, and we can come right here, the 100-week average. If that gives ground, the next number on the chart happens to be the lower Bollinger Band here, and this is the 200-week average. Sometimes 200-week average could be above the market, but Bollinger Bands will either be above or actually there'll be one above and one below the market. The market fell into the 100-week average, found its support, got $2 through that, and is getting a little bit of a bounce. And you're continuing with that area of the bounce, and you close for this week about $5 lower. Now, if you fell back, you'd still have support at this number. The question is, if it gave ground, then you're putting in the play to 1243 level. On the resistance, up here. Momentum-wise, momentum is not turned up. It has still gradually been pointing down. It's not as aggressive as it was breaking early on with the trend, but it's still pointing down. In the ETF GLD, let's go back and look. Same type of pattern. You came down, hit the 100-week, rallied back up. Watch how this 18-week is acting as an important area. If this gives ground, and I don't know if it will or won't at that point, then I'm looking for the potential of getting down to the slow stochastic. Resistance still the 18-week average. Market got down to it, and just like the futures, just sort of stuck right here. I didn't put the 200-week on this. I should next time for you. In GDX, resistance now, you can see it. The 18-week and the 100-week have come together. You have them out of sequence if you're really super bearish. The short-term 18-week should be under the green, and it's not. It could be a sign that this market has hit enough this week on the downside, and that was it, where it stopped at the Bollinger Band. One of the things I teach is that first challenge of Bollinger Bands, up or down, is an important area because pros use that. That's in my charting course if you want to look at that over the weekend on our website. In the gold-silver ratio, still favoring what? As the number stays high, you need more ounces of silver to get an ounce of gold, so it's favoring the gold. When we look at silver, it too has fallen into this number. The first challenge of the Bollinger Band, I don't care if it goes through it by some amount or not. It doesn't mean anything. It's an area that I think pros are taking some money off the table. Who's still controlling the market? Well, the bears are. You've still got lower highs, lower lows, but you have hit a downside number. Momentum is waning on the downside. It's no longer dropping like that. It's starting to flatten out. So, bit of a warning signal. Selling into the depth here could be a problem. Of course, all the metals are going to pay attention to the U.S.-Chinese trade talks. In the copper market, they certainly pulled the plug on that market this week. Momentum down, but you're not in a trend. You have a higher high and a lower low. The market fell down. Settled under, from the looks of it, the 18-week average. I wouldn't be surprised if you play at that number a little bit. With the Chinese coming to town, I can't imagine that the sentiment's going to be, no, there's not going to be a deal. There's always hope for a deal if the two sides are talking, especially this late in the game. Would copper necessarily have to bounce? No, but if you think about it, a boon for their economy would be opening the American market, get rid of these tariffs, and the same for us. So I'll be watching that. In the platinum, you failed against the 18, not the 18, I take that back, the upper Bollinger Band and the 100-day average of closes. Once you took out this number, you made a run for the 18-week moving average, and now the momentum's trying to turn down. Remember, these are weekly, so if I'm saying daily, it's my error. But that's right where you stopped, and you stalled in that area. The market tried, in all honesty, a breakout on a bigger sideways pattern, and I'm going to have to view that run, that particular run, was a failure run. And it went back down, and often you get to that 18-week average or 18-day on a chart and you stall out. Same's going on in the palladium. You've fallen back right into this area. You get over it a little, you get under it. This was the big break that ended this phenomenal run that the market had. And you know, historically, palladium trades less than platinum. It's been a whole mixed up time because you're sitting here with platinum at, let's see, 874, and this market's sitting at 1360. I mean, that's a $500 difference, so pretty interesting in it. But the swing line is up, and you're under the 18-week average. The two fight each other, so you have nothing there. You still have momentum pointing down. Last, the dollar index. The first challenge, I'm going to say it again, of the upper Bollinger Band right through there. And you know everybody's the most bullish they are. Well, it failed. The market's pulled back. You're in an area where the market's losing some upside momentum as well. On break, support might come in at the 96.46 level, the 18-week average. I still say resistance is up through here, and obviously we're all going to wait and see what the news comes out in terms of new economic news. This was a week really full of it. You don't have as big a week next week of that, but you have the Chinese trade deal, and we can't forget that either. You know, you keep hearing me talk about my morning subscriber video because to me it's so important. At about 6:10, 6:15 in the morning, I put on my headgear. I'm sitting down in front of a computer, and this is how my charts actually look. They look different than you see here. I am not in the video. I've got my headgear on, and I'm walking you through all these different lines on a chart, explaining what they are. It's a review. 40 futures markets, typically 5 ETFs. I'm assuming you're having a cup of coffee, you're watching what's going on, and I try my darn best to keep it right in this sequence all the time. Now, one of the things we're trying to do is add on the player bottom where the different markets are. In other words, are you in a currency section or whatever to make it easy. Then, because I'm able to, because this is a subscriber video, unlike these free videos I'm doing on YouTube, I not only talk chart action, I'm going to tell you what I think the pros are doing. At that hour, I've already read to that point in time what's going on overnight in Asia and Europe, and I'm able to bring you up with that. But now I'm throwing out the trade ideas for swing traders, for position traders, for option trades, whatever I see going on, I'm throwing it in and out. A lot of VIX trades, all that will be in there. So that's the idea. And the idea is, gee, you're sitting like this. I want to put on a trade, or I'm looking at the market. What's Ira seeing in the morning? I've got my ideas. Is he bullish, bearish, whatever? I'm assuming if you're watching these videos, you're watching them for one reason. You think I might know a little bit of what I'm talking about. Well, you're going to see a lot more in the other videos. I do charge for it. $7.95 for the first 30 days, no contract. You can quit whenever you want. If you stay, it then moves to the $15 rate, and I give a break if you buy a year at a time, which a lot of people do, $156 for the year. Pretty simple. I also throw in a phone applications. You got your quotes, you got charts, you got news coming through it, my videos come in there. If you use the phone app, whenever I put out a video or anything, you're going to get a push notification, not a text. It's less money, and it tells you that there's a piece of something there. You can hit it. The videos will play just instantly for you. I'm Ira Epstein. Take a look at it. You can also look here. If you go to our website to find this, by the way, it's under Market Research or Education, Ira's Morning Subscriber video. Click it. It explains everything, and you sign up right there. I'm Ira Epstein. Have a great weekend.